Was the Bitcoin crash first that led, I don't know if I buy that, but can you help walk us through what might be going on there, if that's even a real situation?
In the past 12 months, not only did we have a strong rally in equities, we had a strong rally in cryptocurrencies. And that did bring in quite a number of investors, right? And then institutions entering the market through futures and some actually buying coins outright. So I wouldn't be surprised if those investors who saw risk on assets everywhere outperforming globally were also buying cryptocurrencies. And so I think as Bitcoin began to weaken and they de-risked, when you look at the ownership of Bitcoin, it's maybe 70% outside the US. It's really a globally held asset class. So in the next 5 months, a real recovery in price.
Tom Lee envisions Bitcoin's future as transformative, predicting its value could reach $5 million if it achieves market cap parity with gold. Highlighting Bitcoin's role as a potential backbone for a new financial system, Lee emphasizes the importance of strategic Bitcoin reserves, suggesting that U.S. ownership of significant amounts could grant economic stability and influence in a decentralized future. As Bitcoin adoption grows, institutions are expected to embrace it as a secure, immutable, and widely trusted asset. Lee also foresees an unprecedented surge in Bitcoin prices, driven by increasing adoption, institutional interest, and the launch of Bitcoin ETF. He predicts over 1 billion active crypto wallets by 2025, marking a rapid accumulation of wealth in the crypto ecosystem. This growth, coupled with Bitcoin's integration into financial systems and its utility in securing information, positions it as a game-changing asset. In discussing the broader implications, Lee criticizes conventional economic metrics, asserting their manipulation and highlighting Bitcoin as a transparent alternative. With corporations and governments increasingly recognizing Bitcoin's value, Lee underscores its potential to reshape traditional financial systems and urges investors to embrace its opportunities for a prosperous future.
Timeframes have changed, and maybe because maybe the world's more short-term focused. But with instant liquidity, I think that's why people can go from bull to bear, because they can act with a push button now.
Would you be likely to advise them to seek opportunities on the way down, or to sort of wait for a clear, definable hammer sort of bottom?
Well, if someone was really good tactically timing, then nobody wants to buy on the way down. But I've never been able to say on this precise date, you'll have enough liquidity to buy at the low. Because what usually happens is the low is established, the market's rallying, but it's already retraced 50% of the decline.
You don't know it's the low until a week later.
Yeah. Well, the longer it goes, the lower it goes without them pulling the trigger, the more likely they're going to not pull a trigger, because if we go lower, it gets scarier.
Yeah, it gets to become a buyer strike.
Right. I assume you don't see a bear market coming, like a full-fledged 20%er?
It's possible because it's been a couple years, but this would have to be because there has to be a layered shock on top of this. Like if the Fed, for instance, if somehow the Fed decides that the economy's weakening, but they choose to fight inflation and let a recession happen. So in other words, the idea is, well, we've been wanting a recession to kill inflation, let's just let it happen.
Yeah.
Then of course we're gonna have a big drawdown. But that would really require a Fed that decided the employment mandate wasn't important, because, a recession, we just, once a recession starts, there's no such thing as we can engineer a mild recession. I mean, it's you could have a severe recession because you just don't know. You can see why people want to maybe start to be nervous and price it in.
This is the 6th day in a row. This is from Dietrich. It's the 6th day in a row on Thursday that the market is going to be up or down 1%. 6th day in a row. It hasn't happened since November 2020. And you're starting to see some signs of early panic. Next chart, please, Daniel. This is from JP Morgan via Jessica Menton. In the first hour of trading, now this was yesterday. In the first hour of trading, the so-called retail investors yanked $1.2 billion out of the U.S. equity market, the largest pullback during that time period since JP Morgan's data began a decade ago. That's meaningful. So in other words, yesterday at the open, people said, get me the f out. Additionally, this is from Ned Davis. Their daily trading sentiment composite is down to 20, which I don't know what's in here exactly, but that's extreme pessimism. So it's this weird sort of dynamic where we're not that off the highs, but the news is so newsy and noisy that people are freaked out. Yeah. So there's fear. I don't know if it's a bottom fear, but but it's.
And I'm sure that depth of market, like this market is super thin. Now if someone sells, you're going to just see comets falling out of the sky.
This is from All-Star Charts. I think this is Grant's work. Year one of a bull market, obviously, up and to the right. Year two of a bull market, by definition, up and to the right. Year three tends to be pretty disgusting.
Which is where we are now.
Yeah. This is, I've seen this chart and, I'd say I don't necessarily have problems with how this is constructed.
That being said, no? I thought you were about to fillet it.
Oh,
it's-
yeah, but
it's
I
an
can say-
amalgam of many bull markets.
But the one thing I'd say is that there's wide distributions in year three. So there's actually plenty of 20% years.
Okay.
So it's not like, because this chart makes it look like you're only going to be 5% and like you hover like.
It doesn't show
EKG.
all of the distributions.
Yeah, so this is because as wide the distributions are, year three also reflects bull markets end and then you have a huge decline.
Tom Lee predicts Bitcoin could reach $5 million if its market cap matches gold, citing its security and decentralized nature as key to transforming the financial system. He advocates for nations to hold Bitcoin reserves, viewing it as a strategic asset for future economic stability. By 2025, Lee expects over 1 billion crypto wallets and significant institutional adoption driven by Bitcoin ETF. He sees Bitcoin becoming a critical asset in finance and digital security, marking a new era of wealth and global market disruption.
And you have a chart, much better than this All-Star Charts chart. You have a chart showing that the second half after a back-to-back 20% year tends to be pretty lousy.
Yes.
What are we looking at here?
This is all years that had 2 consecutive 20% years preceding it. So that's like that first vertical line says year 0. And then we're just saying, what does that 12 months later look like? And as you can see, you might be okay in the first half, but the second half is usually tougher.
Sorry, is that 1880?
I saw that too.
Yeah.
Is that like Yellowstone?
Tom was digging deep.
Okay. So this is not wildly out of character for what typically happens after you've had a big run in stocks.
Yes.
The reason why I believe in this stuff is because it's just human behavior. Like the variables in all these years are different. Tax rates are different. Inflation regimes are different. Republican president, Democrat president, like all of that stuff is interchangeable. But the
mood,
the component of this that's not is how people trade.
Yeah, because it's eventually
It's fear and greed.
we know good news gets priced in, and then it's hard to determine. But then after a certain amount of time, people might get complacent or whatever you'd call it.
Okay.
Tom, you were bullish earlier. I don't know if you still are about small caps, and I think one of the reasons why we have your chart is that the S&P is driven largely by tech stocks, but the Russell 2000 has much more exposure to rate-sensitive industries. So, is the thinking that if the economy weakens and rates go down, that the Russell would maybe go down less than the market, or do you think that it would outperform in a bull market? What's your thinking here?
I don't think if there's a recession, small caps outperform. So like on that downside, I don't think it's protected. But if we look at the composition here, I actually am surprised it's done so poorly because, for instance, healthcare is the best performing sector year to date, and you can see healthcare is a bigger weight in small caps. Financials have done well year to date. It's a bigger weight in small caps. Industrials have outperformed year to date, and it's a bigger weight. You have less exposure to tech. And
So what's weighing the small caps down this year?
I think it's the push button because
Just people saying sell small caps.
It's higher beta.
Yeah, so they're derating. They got cheaper.
Okay.
Oh,
not
wow.
because-
Small caps are down 15% in a 50% drawdown. I didn't realize that.
Yeah, so that it's not like someone's doing relative value.
They're selling the ETF.
Yeah,
They're selling
just
IWM.
Selling IWM.
It's like the first thing people sell.
Yeah.
It's like, oh, you're worried about the economy? Get that shit out of here. We're not
Yeah.
going to need that.
Tom Lee presents a compelling case for Bitcoin's transformative potential, predicting its value could soar to $5 million if it achieves market cap parity with gold. He emphasizes the importance of strategic Bitcoin reserves, suggesting that U.S. ownership of substantial amounts could ensure economic stability and influence in a decentralized financial system. Lee highlights Bitcoin's role as a secure, immutable, and widely trusted asset that could serve as the backbone of a new global financial framework. With increasing adoption, institutional interest, and innovations like Bitcoin ETFs, he predicts a surge in demand that could drive unprecedented growth, with over 1 billion active crypto wallets expected by 2025. Lee also